If I had a small trading account with a balance of, say, $2,400, what would I do with it? Well, I could go to Las Vegas and maybe try to double my money. Nah, that'll never work. Or maybe I could just take that money and put it into a bank account, which is super safe. And then I can earn interest on the amount of money I deposit. So I searched online to find out what banks are currently paying as a savings rate for money that's placed on deposit. Wow, it's looking kind of bad. Wells Fargo only pays 0.15% as an annual percentage rate. Chase is 0.01%, the same as US Bank and Bank of America. So just parking my cash in a bank account isn't going to work. I'm going to end up losing money over time. So let's say I've been saving up $200 per month for the past year. And now, at the end of 12 months, I have $2,400 in my trading account. What could I do with it? Well, as a stock hacker, the choice seems pretty clear to me. I'm going to take that money and invest it to see if I can get a better return than what the banks are paying. So the first thing I do whenever I start a trading session is I use my one-button stock screener to find potential stock option plays. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. Just sign up for my free newsletter at stockhacker.com and you'll receive a link to download my one-button stock screener for free. So using my one-button stock screener, I was able to find a number of good stock candidates to use for an option play. But this one in particular stood out for me. It's Endeavor Group Holdings Incorporated, stock symbol EDR. So as a part of my due diligence, I checked out not only the fundamentals of the company, but also the technicals. And then I followed it up by taking a look at the option chain to see what the profit potential might be. Investing in this stock as a possible option trade checked all the boxes for me, so I decided to take advantage of it and use it for selling a covered call option. I really like this stock and its potential for an option trade, so I decided to share it with the members of my Discord so that they can see what I'm doing, and then they can decide if they want to take advantage of this opportunity as well for their own portfolio. So now let's go ahead and take a look at the actual transaction record from my account history. Alright, so I placed a limit order to buy Endeavor Group, stock symbol EDR. I placed it on August the 8th, and I entered 100 because I wanted to purchase 100 shares. My order was actually filled on August the 9th, the next trading day, at 4:17 a.m. Pacific time. So it was actually filled during the pre-market trading hours. We can see that the limit price was $23.80, which is exactly what I specified as a part of my limit order. And I actually received all 100 shares at that cost. So my total cost for the 100 shares was $2,380. So my cost basis then is $23.80 per share. So now with 100 shares in my portfolio, I'm able to leverage them and use them to sell a covered call option. So now let's jump back to my account history and take a look at the actual transaction where I was able to sell the covered call option. Alright, here we can see the transaction record where I sold a covered call for stock symbol EDR using a $25 strike price and an expiration date of August 18th. So this was a 9-day option contract. So I submitted my order on August 9th at 5:42 a.m. Pacific time. So this was a trade I submitted pre-market, so before the market actually opened. So it was queued up and ready to go. Now I was asking 45 cents per share as the premium. So we can see that this option contract was actually filled later that morning at 6:30 a.m. Pacific time. So right as the market opened, the option contract I sold was purchased by a buyer who paid me 45 cents per share. So we can see I sold one option contract at 45 cents per share, and so the total premium payment that I received is $45. That's the 100 shares times 45 cents gives me the $45. And that money is deposited immediately into my trading account. And that money's mine to keep forever. I can use it for whatever I want. I can use it to purchase more shares of another stock. Or maybe I use that money for a long-term investment where I buy and hold a stock and hold on to it forever. Or I can withdraw the money and use that cash for something that I want to purchase. Maybe I want to buy lunch or some new shoes, some new clothing, whatever I want, that money's mine. And that's one of the great benefits of selling a covered call option. Alright, so this is super important. I hope you pay attention because it's one of the secrets behind selling covered calls for income. So if you only listen to and remember one part of my video, this is it. The money you received as the premium payment gets deposited into your trading account immediately, and it's yours to keep forever. It doesn't matter what happens to the option contract. It doesn't matter if the option contract gets exercised or if it expires worthless. If you hold on to your shares, if you sell your shares, it doesn't matter. That money, that premium payment is yours to keep forever. And that's one of the great things about selling covered call options. That premium is an income you've generated for yourself just for holding those shares of stock. So how cool is that? Every time you sell a stock option and collect the premium payment, that's actually income you're generating for yourself. That's just one of the reasons why I love selling stock options. So let's take a minute and get a little bit more scientific. I went ahead and created a spreadsheet so we can plug in the actual numbers for this trade and we can really deep dive and take a look at the profitability. All right, so as we saw, I purchased the shares on August the 8th, and it's for stock symbol EDR, which is the Endeavor Group. Now the strike price I used for my option, so the strike price I used for my covered call option was August 18th of 2023. And I used the $25 strike price, which at the time was paying 45 cents per share as the premium payment. Now my cost basis, as you saw, was $23.80. Using these numbers, let's take a look at the actual analysis down below. Here we can see stock symbol EDR, where I purchased it at $23.80. And I only did one option contract. So 100 shares means one option contract. And so the value of the shares that I purchased was $2,380. That's the $23.80 times the 100 shares. And so that's how I came up with $2,380. So I needed to pay that money in order to acquire the shares. So now they're in my portfolio and I can use them now to sell a covered call option. So the expiration date was August the 18th of 2023, which would make the length of this covered call option contract 9 days. Here we see the strike price, $25, and the option premium that was being paid to me, 45 cents per share as the premium if the option contract were actually to get sold. Now I was able to sell the option contract, so that's a good thing. I did receive that premium payment. Now remember, my cost basis was $23.80. Now if the option contract gets exercised, I'll receive $25 per share in order for the person to buy my shares away from me, right? So that's the strike price. Now that price appreciation, right? So I paid $23.80 per share, but the strike price is $25 per share. So I'm going to receive $25 per share. And that difference, that delta, going from $23.80 to $25, that's called price appreciation. And that amount is $1.20 per share. So for every share that I sell, I'm going to receive $1.20 as part of the price appreciation. The total premium payment that I received is $45 because that's the 100 shares times the 45 cents. So that's $45 that got paid to me immediately when I sold the covered call option. So I sell the covered call option, the premium payment gets paid to me, a total of $45, and that gets posted directly into my trading account. And I can use that immediately. There's no restrictions on it. Now that $45 that I received, that represents a 1.89% gain based upon the amount of my initial investment, right? So I paid $2,380 for those shares. By selling the option contract, I received $45. So that's a 1.89% cash-on-cash return just for selling the covered call option. So on August 18th, if the market price is above the strike price, so $25.01 or more, the person that I sold the option contract to will more than likely exercise the option contract and be allowed to purchase my shares from me. So they will pay me $25 per share. I'm obligated to sell my shares to them, all 100 shares. Now let's take a look at the total profit potential I'll receive. So it's going to be a combination of the premium payment that I received, the $45, plus the price appreciation from actually selling the stocks. So that's $1.20 per share, giving me a total profit potential of $165. And that money represents 6.93% return on my investment. Now I know some of you are thinking, well, $165, that's not life-changing money. And I agree, it's not. But let's say you're able to do this over and over again, right? So every time you do this, you get an additional 6%. Wouldn't that be a great return on a 9-day investment? That'd be awesome. Or let's say you have more than $2,380, right? And you're able to purchase more shares, allowing you to sell more covered call option contracts. Well, so what would happen if I were to sell, well, let's say I have $10,000 and I wanted to use that for this options trade. Well, at that point, I could have purchased $10,000 worth of shares. The math doesn't work out equally, but it would have allowed me to purchase 400 shares. And at that point, I could have sold 4 option contracts. So I'll modify the worksheet to show 4 option contracts. So my total initial cost outlay is $9,520. Not quite the $10,000, but I was able to get 400 shares. So the 400 shares times the $2,380 is how I got $9,520. And if you look at the math, it's all the same, right? So the price appreciation is still $120 per share. The premium amount is still 45 cents per share. But this time, because it's 400 shares, we're going to see that the total premium payment I received is $180. That's pretty good. And if on the expiration date, the option contract gets exercised, well, the total payment to me is going to be the premium payment plus the price appreciation, plus the payment for the shares. And if we take into it, so if on August 18th the option contract gets exercised, meaning the market price is above the strike price, I will have received not only the premium payment of $180, but I'll receive all the cash for selling my shares of stock, and the total profit would be the $180 from the premium payment, plus the money I received as the price appreciation, giving me a total profit potential of $660. And that's for a 9-day options trade. So you can see selling covered calls allows you to take advantage of the strategy, and depending upon your resources, you can actually scale it up and receive more cash back. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. Just sign up for my free newsletter at stockhacker.com, and you'll receive a link to download my one-button stock screener for free.